This conference will now be recorded.
Fine. Yesterday we understood about consolidation and elimination process. Consolidations and elimination process. Okay. So whether Aditya joined? Is this Aditya in the very first? Waiting for name 2000-20005. Is it Aditya? Hello. The very first it is showing some name. I don't know. Hello. Harpreet, Kiran, Darpan, Sunita, and Velu. Apart from this one, any other person is there?
It's Rakshit.
Rakshit. Okay, fine, got it. Fine. So regarding consolidation and elimination process, we understood intercompany transactions or payment journal, like centralized payment, something we learned. So whether you want to discuss on once again about business unit versus any inputs, business unit versus legal entity, any debates you want? Harpreet, have you gone through this Monday session? Video recording.
I was actually going through the few sessions, a few internet information also, and there was one more thing which was elimination rules, which I didn't understand what that mean actually.
Elimination rules I have explained. Elimination rule actually in the Monday session, it's like yesterday itself we have discussed them, right? Elimination rule.
Okay.
Elimination rules.
There was one thing which was adjustment of IFRC and US GAAP.
What is that? One is
adjustments of IFRS and /US GAAP.
US GAAP. Okay. This is reporting purpose.
Yeah, basically from the tax prospects.
Yeah. Okay. So that is majorly for I'm not expertise in this US GAAP function. I think it is US GAAP. I think.
Right.
Yeah. This is more about reporting purpose in USA. I'm not expertise in this area, but elimination rules yesterday we have discussed. But let me explain why this elimination rule is required. Why we need to do elimination, the process. I will give you explanation here. So yesterday I have shown like how to do it. If you want, I will show you once again elimination rule, because this is like I mean to say advanced topic and which is important for finance consultants. So why it is elimination rule is required? The reason behind, suppose in Hyderabad I'm running my business. In Hyderabad I'm running my business. Now I have created Hyderabad and one more Warangal as one more company. I have not created as a branch. I have created as a company. Warangal is a one company. Hyderabad is a one company. But whenever I'm submitting to government of authority, government of Telangana, to the reports, at this time, the amount received from Hyderabad to Warangal, Warangal to Hyderabad, these things are not required. Because you are going to do a consolidation and you are going to submit the consolidation report to the government of authorities, income tax reports or sales tax reports, the books, whatever you are submitting to the government of authorities. At that time, the amount need to receive from Hyderabad. And amount need to pay to Warangal. These are irrelevant because altogether it is a one company. You are submitting to government authorities one report for consolidation report for the entire like Telangana state. So at that time, this should be removed. That is the reason we are creating elimination rules. This is a kind of statutory requirement. whenever if it is other legal entities, if you are not going to submit to the government authorities, that is fine, you can leave the elimination process. But if you are submitting to government of authority of Telangana, then amounts need to receive, amount need to pay, like this amounts should not be shown in the consolidation report, so while submitting. That is the reason we are doing elimination rules. So how to do elimination rules I have discussed yesterday. If you want, I will recap once again. So in this consolidation, first you need to go to, we can do elimination through GLCO only, because that is a consolidation company. In that company we have enabled this like the consolidation and elimination process. Where I have started recording. Yeah. So here in this, you are going to do in the consolidation process, in the consolidation module. First one is you need to create elimination rule. So if you want to create elimination rule, we need to have elimination journal name. First, you need to create elimination journal name, and you need to map destination company's elimination company. And here on the lines you are mapping what is the ledger accounts you need to eliminate. What is the ledger account you need to eliminate? Usually, when my experience, 1 series and 2 series amounts need to receive from other company, amount need to pay to other companies. These are receivables, these are payables. Of course, this is intercompany ledger accounts. So that is the reason we need to select these accounts, and then you need to run this elimination journal, and you need to process the elimination process.
Will that elimination will happen only on the basis of account selection, or can that be on the classification also? Like suppose say I want to exclude particular type of transaction only.
Particular type of transaction means I did not get you, because that is the ledger account will be eliminated. I mean to say eliminated means here debits and credits will be tallied, it will become 0. So then it will not show in the report.
Okay.
But not transaction type wise.
Achha, not
Because,
transaction type. Okay.
No, it's not transaction type wise. It is accounts, because 1330 is need to pay to vendor. Sorry, need to pay to the other legal entity, or need to receive from the other legal entity, like this. These are need to receive assets, and liabilities are need to pay.
Well, no, why I'm asking this question is, like suppose I have multiple legal entities, and out of that, like suppose say as per your example, like a couple of them belongs to Telangana, but one belongs to Maharashtra.
Even
So
it is
for the Maharashtra one, I have to submit the taxation.
Even it is Maharashtra also, we need to exclude. That is the reason it is not tallying. The debits and credits will not be tallied, as I told you always.
Okay.
Even Maharashtra also we need to exclude while submitting.
Okay.
Yeah. Fine. So here actually, like we have discussed, like see the branch or business unit versus legal entity. So we need to understand, as I told you in the Monday, I have discussed a lot. Harpreet, actually if you go through my video, it is fine. So you need to remember like the difference between business unit versus legal entity. This is the area we need to have very thorough study of their customer data. And whenever you are verifying, so here Warangal is not required as a legal entity. I can create as a business unit. This is fine. But the customer requirements, you need to understand whether they want special permissions or user like roles and responsibilities. I mean to say Warangal manager should not look at Hyderabad manager, Hyderabad details. Hyderabad details should not be looked at Warangal manager. If I want like this, I can create as a legal entity. That is the permutations, combinations, the pros and cons you need to study a lot, and then you need to take the decision whether it is a business unit or legal entity.
Got it.
Okay, So this is the area, because and it's not like all clients, maybe around 5% of the clients, they suffered a lot because of instead of business unit they have selected legal entity. In some scenarios they have, instead of legal entity they have selected business unit, and because of that there is a heavy customizations in terms of functionality. And if you have more functions of customizations exist, then it will create problems in somewhere else. So my intention is always how I will give priority. First, I will give priority of statutory reports. Statutory reports, how you want. First focus, this should be statutory reports. Next, user roles and responsibilities. How they want. How the client is looking at roles and responsibilities. Then I will take the decision. Next, internal reports. This is my priority always. First, statutory, always the first priority, the highest priority is I should not, my business should not struck for the submitting to the government authority reports. It should not. If it is in even a 1% deviation, it will create problems. It will be heavy penalized. So the statutory reports is the first priority. Then roles and responsibilities, how the client wants, the internal users, how they want. Then reports. Based on that, we can proceed. Sometimes there is a plus points, like even as I told you, Warangal is one branch. Actually, I can create as a branch or a business unit, but I have created as a legal entity. Yes, that is based on the requirements. Okay, fine. Now let us understand a new topic. Anything we need to discuss here?
Satya, I have a question. In case of eliminations, say example, we have got two companies, Telangana, Warangal and this one,
Hyderabad.
where Hyderabad case. In this case, say there are two companies and I am doing my payments for all my purchase order from the Hyderabad company.
Okay.
So, but my purchases is happening in the like the centralized procurement, what we saw that day. Now, how will the system identify? Because obviously, two questions I've got in this. In the elimination rules, how will I know that what are the outstanding and what transactions to be considered? And in terms of the settlement process, which is happening in the Warangal company, how will the purchase order be settled? Because I'm doing a payment from the Hyderabad company. How the payments are settled and how the reconciliation happens in Warangal company.
So here, whenever you are doing intercompany, means you have intercompany setups. General ledger, posting setup, intercompany accounting. So here, USMF versus DMF. Take the example, this is Hyderabad and Warangal. And USMF versus USRT. It is Hyderabad versus Mumbai. Take the example. One is Hyderabad and Warangal, one is Hyderabad and Mumbai. So in this case, we know that clearly, like what is the ledger accounts. Am I right? We know very much clear about what is the ledger account. These accounts only I will configure in the elimination process. So while doing this one, like here, my intention is elimination. But if you want to do payments, that is normal payment only. The payments you can. So reconciliation is not much required here because system is creating the journals. If you want, you can do manual reconciliation like normal, the way how you are going to do it. But here, very less reconciliation requirement is possibility is there, because system is taking care about the one is debit and credit and credit and debit. Of course, if you want, you can generate the report related to that account intercompany, this journal name, related vouchers, and you can validate. Unnecessarily, if the opposite company is creating transactions, that is manual. I mean to say manual reconciliation only. Okay, but Yeah, manual reconciliation only. Like you need to whether you have received, because on behalf of your company, whether really that head office paid or not, you need to validate.
But can I get to know on the transaction, like example on the purchase order, when I go to the DMF thing, will the order show it as settled thing? The invoice will show it as settled, or it will show it as open one?
So here I'm talking about financial transactions. One is payments, vendor payment, and journal payment. Are you talking about intercompany purchase orders?
No, only payment itself. Say I have done the purchase in say DEMF, but I have done the payment through USMF. Okay.
Then
so in the last
once again it is hitting the intercompany journal, am I right? This journal only, always.
Correct. Okay.
So whatever the transactions it was posted for this journal, I can get it a report. It is simple, so simple. You can go to general ledger module, inquiries and reports. Here voucher transactions. In this, I can select the transaction type as internal journal, and related to the transactions, whatever it is, INT journal, whatever it is there, those will be like shown. It will show the type. Understood?
Okay, I'll have to go through here to identify what is posted or what is paid or not paid.
Yes.
Settlement. Say.
The normal like normal here transaction type you can select as something, not transaction type, the journal name. Okay, so internal journal, whatever it is there, it's inside it is there. So you can take the filter of that type, like INT journal name. So yeah, that is possible, and you can get it. See, whatever you are doing, because simply you are making separate journal name, am I right? For this intercompany accounting, you are making journal name separately, INTJN. With this filter, you can get the report, and you can validate whether it is really paid by your counterpart company, is paid or not. You can validate. This is a manual task.
Okay. So that's a manual task.
Yeah. Fine. So anything else? Team, anyone? Okay. If nothing, then I want to show one small function, which it is earlier it was discussed but not completely explained. Let me go to this accounts payable payment journal. Specifically, I have not explained, but I have shown. But let me show you. Let me detailed explanation. So while doing this payment journal, if you go inside, so here in this you are selecting vendor. You are selecting vendor. This is, if it is intercompany, it is DEMF. Otherwise, it is USMF. Otherwise, if I delete, it will show you USMF only, because it was intentionally selected DEMF. Otherwise, let me map. Fine. So while doing this one, you are selecting the vendor account. You are selecting the vendor account. Normal. If it is other other than this legal entity, I mean to say centralized payment, you can select other legal entity. Okay. So let me map 1001 vendor account. Now you can have two options. One is partial amount, directly you can enter, or you can click on settle transaction. These transactions we understood. Now in one scenario I have explained, this one I have shown, but let me explain this one now. Payment proposal. What is this function? Payment proposal. Give me a second. Give me a minute. So what is this payment proposal means? Let me select vendor account. So we know like partial amount you can enter, partial payment, or you can select the settle transactions and you can select the invoices. Suppose I'm clicking settle transactions. Here there is, suppose 500 transactions are there or 1000 transactions are there, huge purchases it is happening. I need to verify which invoice having discount I want to do the payment first. That is my intention. Suppose 1000 invoices are there. If I want to select one by one, it is very complex. Agree with me? Suppose 1000 invoices are there, or 800 invoices are there, or 2000 invoices are there. If I want to choose one invoice, little bit complex. So to eliminate that complexity, to come out from that issue, we have a function called payment proposal. Payment proposal, create payment proposal. So here this is filters. Based on the due date you want to filter, yes, you can select, or based on the cash discount date and amount, then it will filter by this date. Otherwise, if you want to filter by the methods of payment or terms of payment, method of payment, check method of payment. So you have multiple options. This is like if it is there will be method of payment. Suppose method of payment check, whatever it is there, I want to select that method of payment check. And I can click OK like this. So I don't want to make much filters because the data is very less data here. So suppose the discount amount is more than $50, then I want to do the payment for that one. Then I have selected cash discount, date, or due date and cash discount, whatever you want you can map, and click OK. And from this date to from due date, and if you click OK, then it will propose you what are the invoices exist more than $50 discount. The filter criteria. So particularly for vendor payments, I need to search which transactions or which transactions due date is pending or cash discount is pending in general. So those will be populated here. One is due date, one is discount. So anyhow, in 2017 there are many transactions. Those transactions are capturing by system. It is searching for discount $50 and due date. I think small mistake. I have not passed the vendor account. It is searching for all vendors. It is searching for all vendors. I need to pass one vendor. That is I skipped that one, because if you have not passed the vendor one vendor account, it will search for all vendors. Now even though it will not look at the vendor I have selected here. In the create payment proposal, at that time I need to select for which vendors I need to do this process. Now it is searching for all vendors. That is the reason it is taking time. Okay, so the discount, whatever it is there, it was populated, I think, the amount and discount. Only one vendor it was filtered. So here, this is one vendor, this is another vendor, this is another vendor. So you can click on create payments, then automatically it will show the payments. Because we have entered the amount, it is populating the less than amount, that is $50, less than $50 it is populated. I will show you once again. Method of payment check, and less than $50, whatever it is there, it was populated. Let me delete this one and let me show you once again. So I'm showing create payment proposal, and create payment proposal. So here, if you select due date and amount, due date means it will show you, it will pick you the due date team. Hello, are you able to hear me?
Yes.
Okay, there is a network issue, actually power gone. Okay, so no issues. I changed my network. Now here you can have options to select due date, or you can select cash discount date, or you can select both cash discount date and due date. Either options. Okay, suppose if you select due date, and if you don't have any amount, if you select due date and if you have not selected any amount, then all the transactions due date is whatever it was crossed, those will be picked automatically. And here in this you need to pass for which accounts, I mean to say for which vendors you need to do it. If you are not mentioned, it will search for all vendors. Okay, so this is the parameters. You can use the filters. In real-time scenario, we will use these filters a lot, because if I am doing manually settlement transactions, if it is a small organization, yes, it is possible, you can use settlement transaction. But in real-time scenario, if it is a like purchase will be huge, then in that case transaction data, I mean it is a transaction data is huge. Rather than this one, you can use create payment proposal. Understood? Any doubt here? Any confusion, or is it clear? So like centralized payment, during the centralized payment, I told you, like if you want to include for some other legal entities, you can select here. Then while doing filter like vendors, it will show you other legal entities vendors also. Whenever you are clicking enabling, this checkbox will show you the filter will have instead of 3 buttons, there are 4. Now company range also it is coming. You can select other legal entity as well. Okay, you can play with this scenario. It is simple only. but a beautiful function in real-time scenario. Okay, fine. Any doubt in this? If nothing, then I would like to proceed with one more topic. It may not be finished by today, but let us understand. One is letter of guarantee. Letter of credit. Letter of guarantee, letter of credit. These are the two options, two functions available in cash and bank management module. One is letter of credit, another one is letter of guarantee. So here letter of credit means bank will pay directly amount. Bank will pay on behalf of where it is both sides, exports or imports. Letter of guarantee means bank is giving guarantee in case of like in case of customer is not paying to you, then bank, if it is customer is failed or defaulted, then bank will do the payment. This is bank guarantee. Letter of credit means bank will pay money whether the customer is paid or not. Bank will pay money directly to you, and then later it will reselect, it will verify with the customer. This is letter of credit and letter of guarantee. Okay, so let me show you in the system where we can do this letter of credit and letter of guarantee. What are the setups and how to do it? Let us understand. So like I mean to say, this is letter of credit will be used majorly for exports and imports, because I don't know the vendor or customer. So like one is majorly if I'm exporting material to the international customer, I don't know the whether I'm going to receive money from the customer or not. So for that I will take letter of credit. So theoretically I have some knowledge. Let me explain you what is this, then we'll show in the system. Usually what happens, this one, suppose this is our client, and this is customer, this is a customer. Okay, so I don't know, there is no mutual trust because I don't know about the customer, and he don't know about me. Mutually I don't know each other, we don't know each other. This is client, this is customer. Now what happens, this client will have one bank account, and this customer will have one bank account. So this bank know about this customer very clearly, and this bank will have mutual contract, client versus bank, and customer versus bank, they have mutual trust. Agree with me?
Satya, what is the difference between client and customer here?
Okay, so for this I need to come back here in the very first day session. Organization chart. This is the client where you are implementing, this is the customer, because we are partners, software company. This is the client, client will have customer. So for Microsoft software company, this is the customer, but I will use the word client wherever you are implementing the product.
Okay, so got it. The company where we are implementing or the company where we are working is the client.
Yeah, because for software company this is a customer, but this for this one this is a customer. There is a confusion in the word customer. That is the reason for this software company, even though it is a customer, I will use the word client.
Got it.
Okay. Now, so this wherever you are implementing this company, like this company don't have any interaction with the customer. So now this client, when like this is going to export the material, while exporting material they will have a letter of credit will be taken from the bank. Letter of credit will be taken from the bank, and these documents will be sent to this bank, because internationally one bank will have contacts with other bank. Am I right? They know about the banks, how standard they are. Now these documents will be exchanged between these two banks, and this bank is giving surety on the material exported, and this bank will collect this bank amount, and this will be paid to this client, and this customer will have the contact this one. So anyhow they will pay the amount and they will collect the material. This is letter of credit. Make sense? Any confusion here? This function also actually in when I'm implementing in AX 2009 in during 2010 year 2010 and 11, at that time client asked about letter of credit and letter of guarantee functions, but unfortunately in AX 2009 this function is not exist. This function is not exist. In 2012 on D365 the functionality is available, letter of credit and letter of guarantee. So clear the concept? Even exports also, even imports also. The same scenario, because you don't know about the vendor details. Suppose like a vendor may not trust you, like whether you are going to pay the amount or not, but bank, this customer and client, the bonding is high. Am I right? The mutual trust, and this customer and bank also has bonding is high, and this bank and this bank definitely they will have the interactions. So the documents will be exchanged through bank, and material will be taken by paying cash to the banks, and this customer will take the money, will take the material. So letter of guarantee is on behalf of bank, on behalf of customer. Bank is giving guarantee. That's it. In the bank letter of guarantee or bank guarantee. Bank guarantee means here bank will not pay the money. If it is in case customer is defaulted, then bank will give the money. Make sense? So there is two terms. One is letter of credit and letter of guarantee. So how to do it in the system? Let us understand. In cash and bank management, the first most setup is in the parameters, cash and bank management parameters. If you want to use this letter of credit, export and import and bank guarantees, you need to enable these check boxes. You need to enable these check boxes. This is first priority. Okay. One is letter of credit, import and export. One is for import, one is for export, and this is letter of guarantee. Next, once it is enabled, then bank facilities, You need to create letter of credit or letter of guarantee, and you need to map the facility type, letter of credit and letter of guarantee. Here you need to define. Okay, so I will create one kind of guarantee. Like I'm creating, suppose take the example, bank guarantee, something for understanding purpose. Letter of guarantee, it is letter of guarantee. Letter of guarantee means bank guarantee I have created. So the first step is this one. Yes, please. Yeah.
While creating this letter of credit or letter of guarantee, is a legal team involved in it too?
Yes. So you need to approach the bank. It is, I don't know about the legality, but bank approvals, because the entire functionality is involvement is bank majorly. But legality, I don't know about the legality, but bank document is heavily exchanged.
Okay.
But I'm not sure about the legality. I don't think so legality is required, because how the bank will give guarantee based on your inventory. Based on your inventory value, bank will give guarantee on this one. Both sides, for customer side or vendor side, always they will validate your inventory valuation. So that is the reason periodically the organizations, wherever you are having a company and a bank, the organizations will submit inventory valuation reports periodically, maybe a monthly, maybe a weekly. I saw, like in my experience, monthly. The bank accountants, they will submit account statement, like I mean to say inventory valuation statement document to the bank periodically. One is for like this kind of letter of credit or letter of guarantee like this, and another one is like I mean to say current balances, CC, credit limit, cash credit limit. Bank will take the loan, like this client will take the loans from the bank. So for all those things, they need to submit inventory documents, inventory valuation documents periodically.
Okay.
If it
Okay. Thank you.
Crores loan from the bank. Like bank accounts will have, one is saving account, one is current account, one is cash credit, CC account. 3 accounts will be there in bank. So let me, anyhow, we have a chance, let me discuss. One is saving account. Bank will have saving account. Another one is current account. Another one is CC account. Saving account means currently what we have normally, like if I open my bank account, definitely it is a saving account. But whereas if you are opening a bank account in TCS, one of my friend is working in TCS, they will give current account. They are arranging current account. Current account means indirectly you are a business. If you are running a business, they will give a current account usually. But the same kind of, but here you have like a bank will assume like you are running a business kind of thing. If it is cash credit, CC account means against your inventory you can take loans 80% or 70% of the inventory valuation. Based on that, they will give you the loan, because if you are running your business, we need to have loans. So bank interests are very less always when compared with the other one. So the loans will be, we can get it, that is cash credit account. These are the 3 types of bank accounts can be created. Okay. Fine. Now, so at that time, whenever banks are giving this letter of credit or letter of guarantee, I don't know in depth what it is, but they will validate your strengths and weaknesses of the company. Bank also they will not give blindly the assurance or guarantee kind of thing. They will look at your parameters. They will monitor your parameters continuously. One is inventory valuation. I'm not sure. I think we need to submit to like a balance sheet also. I did not remember because when I'm working in 2002 2005, between 2000 and 2005, 5 years I worked in as a like end user and implementation consultant, support consultant, test consultant. There are many roles I did it. At that time, I observed closely a lot what accountants are doing. So they are submitting inventory valuations and even balance sheet, I think, because in the balance sheet, if it is the amounts are pending from debt funds, if it is anything is there, from the customers, how much amounts we need to receive. Okay, those balance sheet also they will observe. Your bank, your company condition, always they will monitor. And based on the relationship between you and the accountant, it will be processed. That is offline, it will be going on. Okay, whether I have given answer your question or anything else, Sunita?
Yeah, no, it makes Satya. It makes sense to me, sure. And depending on place to place, the formalities, even in the bank too, the transactions, everything might be so different from country to country. I guess, and client too, the way the one client is doing a business would be different from another client. So I understand that um, you are giving us the gist of how it functions.
Yeah, exactly. Fine.
Okay, thank you.
Yeah, welcome. Fine. Now, the first setup is one is in the cash and bank management module. The first step is this parameters to be enabled. Let me write down the mandatory setups, whatever it is there. So the entire process, it will not be completed by today. Tomorrow will continue, but let me write down the steps. So if you want this letter of credit or letter of guarantee functions to be used in the system, the first most important parameter is one is cash and bank management parameters. So first tab, I think it is a general tab. General tab, bank document, you need to enable. This is first step if you want to use this one. Next one is second step. Once it is configured, next one is bank facilities. Okay, you need to create the bank facility type. So I have created bank guarantee as letter of guarantee, whatever it is there. So next one is bank facilities. You need to configure. So this is in cash and bank. Setup bank facility. Bank facilities, bank facilities. This is the next step. Third one is, these are the setups, minimum setups required. Next one is letter of guarantee, bank transaction types. First, let me finish this one. You need to map the ledger account. Here, not this one. Give me a second. This one. Bank document posting profiles. So which ledger account should be posted? This is one most important. Third step is bank document posting profiles. The ledger accounts mapping should be done. One minute. Not this one. Okay. Here you need to map the ledger accounts, the expenses and settlement. Okay, these accounts you need to map. Next one is, once it is mapped, next, bank facility agreements. In this, you are going to define how much amount and what is the term, like a period. So let me create a third one. I'm creating new one. Bank operations, USMF operations I have selected, and the starting date is the financial year I'm taking. So I'm taking never end. Okay, and what is the limit for this one? I have created bank facility type bank guarantee. Okay, the limit, suppose I'm making 2 lakhs. This is up to this amount. Bank has given a bank guarantee. So as I told you, this is mutual exchange like documents you need to map. So the bank has given you the guarantee on 2 lakhs. Up to 2 lakhs you can use bank guarantee or bank credit limit also, like a letter of credit also you can use up to 2 lakhs. You can create one more letter of guarantee also, letter of credit also I will show you. This is I'm showing you bank guarantee 2 lakhs. So here I have started with a letter of credit and I'm showing you letter of guarantee. So both are same, but here let me create letter of credit in that case, because I have started with the letter of credit. So I'm sorry, let me create a letter of credit only, so that it will not mix letter of credit and letter of guarantee together. First I will show you letter of credit and then letter of guarantee. We'll see bank facilities, because I have started diagram for letter of credit. Let me use that same letter of credit function. I'm creating LC, letter of credit. You can use the existing one also, but for understanding purpose I'm creating new one. Letter of credit. Then you can create letter of credit document also. Both are similar, only the function difference is not this one. Bank facility agreements. Only difference is for exports. For exports, we will use letter of credit. For internal within India, we'll use bank guarantee normally. Okay, so let me create. This is I have created for bank guarantee. Let me create for letter of credit also. So for letter of credit, I will use 5 lakhs. Okay, I think in order to create new one, we can use the same here in this letter of credit also we can use. For letter of credit, I'm making 5 lakhs. Something. Okay, so one is letter of guarantee, one is letter of credit. We have created. Next one is important function, one small checkbox. Give me 2 minutes time, and then I will stop here. We'll continue tomorrow. Bank reasons is most important. So you need to create so purpose code should be enabled. So these are the setups required. These are the setups required. So tomorrow I will show you the transaction. One is letter of credit, one is letter of guarantee. Both I will show you. As I told you, letter of credit will be used a lot for exports a lot. Letter of guarantees will be used in the within the country. Within the country we are using, because letter of credit definitely bank is paying immediately the money, whereas letter of guarantee bank will not pay money. It is in case bank like a customer is not paying money, if it is defaulted, then only bank will pay the money in the letter of guarantee. So the charges will be different from letter of guarantee versus letter of credit. Letter of credit charges are high from the bank. Letter of guarantee is very less. So always if it is within India, I don't want to use letter of credit function rather than letter of guarantee. Okay, I will continue tomorrow. I will show you these functions tomorrow in detail about this process. I'm stopping here. If anyone want to speak, please unmute yourself. Otherwise, we'll continue tomorrow.
Yeah, so usually the letter of guarantee involves collateral. Unless the amount is very small, banks are not really comfortable. Not banks, the credit part. Even the legal department will only involve only when there is a default, or even in the beginning when the draft is created. Then legal teams are involved to create how the letter of credit should be, so that it gets approved.
Okay.
So, yeah.
So you mean to say like legality also involved in this process?
Yeah, only when the client defaults, then the legal team, as to how it's to be taken forward, then the legal team will actually advise. That's one thing.
That is makes sense. Yeah, exactly.
Yeah.
But
And,
before defaulting, it will not be, right?
Yeah, in the beginning, to create the draft, as in the letter of credit should be approved. So for that, there would be a format, there would be a draft, so that the legal team approves, and then the client initiates to go to the bank with a letter of credit to get it approved.
Okay.
So that's one thing. The guarantee part, for smaller amount, it's usually taken as unsecured credit. It might be up till 2 lakhs, 5 lakhs, maybe bank will take the risk of giving the letter of guarantee. Beyond that, there has to be a collateral. Yeah, that's how it works usually.
Yeah, agree with you. Makes sense actually. That's fine.
Yeah, that's all.
Fine. Thanks, Rakshit, for your inputs. Okay, we'll continue once again. Like I think you are able to, like Rakshit, you are going to join tomorrow, right?
Yes.
Fine. So we'll continue once again tomorrow, like this letter of credit and letter of guarantee, how it works in the system. I will show you tomorrow. Okay.
Thank you.
Thank you all. See you. Bye.